Adjusting tab, we're going to say this is going to happen on 2/28. I look in my sheet over here. I see that I have $12,000 in prepaid insurance. So we're going to say, okay, we need an adjusting entry for insurance expense. So what would we do then? We'd get the insurance policy and say what period is covered by the insurance policy for which we paid the $12,000. So we're going to say the cost for a year. Let's say that the year cost $12,000. We're going to say that the insurance happened, we'll say, in the start of February. So we're going to say that the insurance took effect in February, and we have a year of transaction of insurance that will be covered. So then the question then is going to be, all right, well then the months in a year, in a year are 12. So that means the expense or coverage, let's say coverage per month is going to be the 12,000 divided by 12, which we made to come out nice and easy. I'll put an underline here. So that means that we're going to have $1,000 of expense per month. Now, obviously, the months that have passed, months past is only 1 month. I'm going to indent this. 1 month has passed because we're going to say that we bought the insurance. It was covered for the period of February. So February coverage has passed, and then we have 11 months into the future. So therefore, the prepaid, the expense the expense entry is going to be 1,000 times 1 month, or of course 1,000. So that means that we should have an expense for the 2-month period ended of 1,000 because only 1 month was actually had the insurance coverage. We didn't have any coverage for that first month. So luckily no crazy person hopefully sued us during that time period. So we have prepaid insurance then. So that means that the months remaining are 11 months, right? So now we have prepaid insurance should be remaining of 12,000 minus 1, or you can think about it this way. It would be 1,000 times 12 minus 1, 11 months. 11 months remain. So prepaid insurance should still have 1,000 in it. I'm going to indent that. So that means, what's my journal entry going to be? It's going to be $1,000 decrease in the insurance expense, resulting in prepaid insurance of 11,000, which represents 11 more months, which are in the future, therefore not yet consumed. The other side going to insurance expense for the amount that has been consumed in the period that is covered. So that's going to be the idea. Now, note one other thing that's kind of confusing with some of these prepaids. People get confused with the fact that they're going to say, hey, look, I already paid cash for it. I've already paid for it. How can it be an asset if I've already paid for it? Because it's not like I'm going to pay for anything in the future. And it's like, even though you're not going to pay for it, we still consider it an asset because it's something that will be consumed in the future. You can't really get out of it. You're not going to get the 12,000 back in other words, right? But it's not something that you have yet consumed. And a similar concept would be applied if you prepaid for rent, for example. If you said that I'm going to pay 5 years rent in today, and I've already committed to that, there's no way out of it. I've already paid the 5 years of rent. So shouldn't I just be able to expense the 5 years rent? And because that's more substantial, the people can visualize the rental property and using the property, it might be more obvious to say, well, no, you can't do that because you haven't consumed the use of the property yet, right? You still have to be given the use of the property. If you didn't get the use of the property, of the rental property, then maybe the contract would be broken and maybe you can adjust the contract. So sometimes that's a little bit wonky or difficult to understand. And sometimes if you're in public accounting, and you're talking to like a CEO or something, the owner of the business that's more cash-based minded, these accrual concepts will be confusing to them, or they won't like it so much, right? Because their mindset is on the cash basis, and you're going to have to kind of say, well, this is why we have to do this, because this is what we have to do for accrual accounting and or for tax preparation. We have to follow whatever the rules are with regards to the tax preparation. Remembering for taxes, the idea of the IRS is going to be skeptical of the abuse of the difference between when cash is received or paid and when revenue or expenses are incurred. So like if that scenario happened for the rent and you paid for rent 5 years in advance, then the IRS is going to say, well, there's no way we're going to let you do on a cash basis, even if you're a cash-based business. Why? Because you're manipulating the system. You're trying to get an expense 5 years early by just paying the cash now, even though you haven't actually consumed the use of the facilities, right? So that's how the cash basis can actually be used if you had cash flow to distort when you would have the expense, which the tax code is going to try to stop from doing by making you do an accrual thing sometimes, even though you might be on a cashed basis in some cases. All right. So let's say we have the 1,000 insurance is going to go down for 1,000. We'll say decreasing by this 1,000. And the other side's going to go into insurance expense. Insurance expense over here somewhere. Donde insurance expense negative because it's bringing down the equity of the 1,000. And then we'll just zero across the board, baby. Zeros across the board. And so there we go. Yo. And almost there. There we have it. Okay. Bringing it back. Let's pull down the balance. I'm just going to pull it all the way down. We'll get a lot of zeros, but that's okay. Boom. Transaction still in balance. Classic adjusting entry where the asset, let's go scroll up, and I'm going to put my cursor here and do the view tab thing and freeze the panes so I can see that top bit. So now I can see classic adjusting entry because there's a balance sheet component to it and an income statement component, meaning there's a timing difference kind of that's happening with the adjusting entry. Now you might ask, is there going to be a reversing entry to this, as we talked about similarly when we saw the for example, the cutoff situation with the accounts receivable, which we said that one did have a reversing entry. This one does not. Why? Because this is a permanent change. It's not that we tried to pull something out that was in the wrong time period and therefore have to reverse it because of the timing difference. This is a permanent change that took place because just of the way that we set this up, in that the bookkeeping or accounting department's just going to increase all the time the insurance, prepaid insurance, and then we are the ones that permanently decrease the prepaid insurance in accordance to how much of that prepaid insurance has actually been consumed, and therefore we're not going to reverse it. All right, so then let's put the balance down here, and we'll bring down the balance. Let's put an underline. I need an underline for formatting's sake. And so we'll go home tab. Wait, that's not the home tab. What was that? What would that do? All right, let's go try it again. Home tab, underline, and the font group. And then we will sum up equals the SUM, prior balance, current activity, enter, Control C, right arrow, holding down Shift, right arrow, boom. And then we're going to right click and paste it, just the formulae. And then, because the formulae don't lie. I'm going to select these three. And then I'm going to pull this down. You know, I went to a conference and they had 2 meals that they were going to serve. And they called them the A tray and the B tray. The A tray is the one I ordered because it was the steak, and the B tray was the vegetarian. one. So I ordered the A tray, and they totally betrayed me with the vegetarian one. They totally betrayed me. They're like, "Oh, I didn't know that we betrayed." It's like, no, I know what happened. You ran out of the steak. No one wanted the vegetarian one, and then you totally betrayed me with the B tray. Anyway, so that's where we're at. So then we can see over here that of course brought down the net income. So now we're at net income of 3797. Let me check that too. Well, yeah, 3797. So that looks good. All right.